Eugene, just looking at the market today, it of course once again seems like you've got value investors coming into the market and picking up some of the resource stocks, which of course have been sold off, even though there's a lot of negative news flow, specifically for the likes of like a Kumba Iron Ore, when you look at the outlook coming through from Rio Tinto. Your views on kind of the movements that we're seeing within the sectors on the top 40 today?
Yeah, one can see that there is definitely a bit of nibbling on the value side, although the turnover in the market is extremely low, and it just reflects the nervousness that is present in the market currently. However, if you look at the defensive stocks and the valuations that they in general trade on, they're still very expensive. We saw the retailers today, for instance, picking up, and they're just going from height to height, and that's a little bit of, I would thought, fear management climbing in. It's unlikely that one would like to switch into them at these levels. They're excessively expensive, and I mean, markets like this might be frightening, but it gives you a lot of opportunity as well.
I like that word you use, fear management, in the markets today. And of course, as we said, you know, 6.7 billion rand is very low turnover for the local markets. Just picking up on some of the comments that came through from Rio Tinto, as I said, very cautious and seemingly even more cautious going forward, particularly around iron ore, estimating 100 million tons of Chinese iron ore production right now unprofitable. What are your views on what that means for some of the companies listed in South Africa, BHP Billiton, Kumba Iron Ore, etc., that are very much exposed to the iron ore sector right now?
Yeah, iron ore took a serious dip over the past couple of months, but it's bounced back quite nicely. I think it's trading around $110, $120, $117 a ton at this stage. Which is a good recovery. And if you look at Kumba, or more specifically Sishen and the new mine as well, they are on the higher, one of the more higher margin miners in the world, which is very attractive. I mean, you need iron ore substantially down to get to cost on the Kumba mines or the general mix. So Kumba, yes, if they can sort out the strike action and get the product in the market, it would be quite nice, especially given the current rand value. If you look at the correlation between the dollar and the rand iron ore price, you can see the spike on the dollar iron ore price, the rand iron ore price.
BHP Billiton, just looking at that stock today, down 0.6%. And interesting, just late into the trading day, issuing a note saying it's issuing debt in the Australian market, 1 billion Australian dollars in terms of debt. The interest on that, 3.75%. But it is an interesting trend that we are seeing coming through from corporates, and more of them looking to the corporate debt markets to raise funds right now, specifically for BHP. Do you think this was the right move for them to tap into a market where you're very concerned around the outlook for that dollar right now?
Yeah, if you look at the Billiton debt programs, they've been tapping the market over the past month in Aussie dollar quite, well, reasonably aggressively. They had 3 or 4 different taps, I noticed late this afternoon. I think what we are seeing is, with interest rates at the current levels, you are seeing the big multinationals tapping the debt market at extremely low prices. The credit spreads are extremely low. It's the hunt for yield that is pushing it down, and they are applying that money across the board, but especially to buy stock down. And give them cash flow for when they're going to need it going forward. So the guys are clever enough to utilize the low interest rate regime in a sensible manner. And it's not just limited to Billiton and the local miners. I mean, this is a tendency that we've seen, especially in the States, on the multinationals, that they've applied very aggressively. The credit issuance over the past couple of months was very high.
Yeah. Just looking at Allied Electronics numbers coming through, I mean, first half HEPS pretty much flat, revenue increasing. Both the Fenter brothers, both from Altec and of course Altron, seemingly a lot more optimistic on the future going forward. They say West Africa sorted out, East Africa they're sorting out. What are your thoughts on the stock price right now when it comes to Altron?
I mean, this stock has been clubbered to $22, if I'm not mistaken, over the past while. though it doesn't point to be, or it doesn't look excessively cheap in our mind. We think they've got serious problems in Africa still. It's not sorted. On the local side, I think the infrastructure development side is helping. The cabling, the UK side of the business seem to have been doing well. What I did notice is that even though revenue in general picked up quite nicely, they had a lot of margin squeeze. There's a lot of competition in the markets that they're operating. So yeah, it's, as they said in their trading statements, very, very challenging markets where they're operating in. I won't race to buy the stock.
Eugene, thank you so much for joining us today. Eugene Goosen, Portfolio Manager at ORA Fund Managers.